right? So I think quite recently, I've been receiving a lot of questions on how to actually, or what investments is more suitable for someone that's going to retire. And I've been thinking about this question a lot. And typically, when I first started my journey in investment banking, I still remembered that a lot of friends and also family members used to come up to me and ask me, "Hey, Adnan, what's the best way to invest? And what's the best way to actually accumulate and also build wealth," right? So back then, when I started my investment banking journey, there was no such thing as ETFs, right? And I for one thing, I wanted my friends and also my relatives to not only make some good returns, at the same time, I do not want them to make any losses. And I think if any of you guys have invested in the stock market, I think you will know, right? That sometimes if we buy one stock, right, there is a high probability that this stock will actually go up very high in price. But at the same token, there is also a probability where a certain stock may go down, right? And this is very common, especially for penny stocks, right? So I think as a whole, right, penny stocks, right, sometimes we can buy it for maybe 80 cents, right? For instance, and say that penny stocks actually from 80 cents, it drops to maybe 20 cents. That's basically 1/4 of our investment, right? And say if we buy again a penny stock, right, 80 cents, and it goes up to maybe 160 or 2 ringgit, right? That actually gives very good return. So like I said, penny stocks or stocks, sometimes they can give you a very wild swings, right? Especially penny stocks, right? And that's one of the reasons why, if you notice my portfolio, I've been sharing my portfolio many times, right? In previous episodes, you can see that most of my portfolio would consist of a couple of penny stocks and also a couple of blue chip stocks, right? And I think one of the biggest questions is, why do I even invest in penny stocks and also blue chip stocks? The whole thing of it all is that if we buy a basket of stocks, maybe 4 or 5 stocks, right? Say stock A, maybe it goes down by 20%. And then if we have stock B, maybe it went down by 5%. But maybe stock C, D, and E, if it actually went up by maybe 10 or 20%, right? Our overall portfolio, we will not lose that much of money, right? And there's this investment term that says that a free lunch, right? In investment, one of the best ways to actually invest your money is actually by diversifying, right? When you diversify, you're basically diversifying your risk. Hey, brother, how are you, my friend? So, like I said, right, if you notice any mutual fund or unit trust, right, every time when you put your money in a mutual fund, unit trust, or even ASB for that matter, right, Amanah Saham Bumi Putra, right, you will notice that in that fund, it consists of a couple of stocks. And the main question is, why do we want to invest in multiple stocks when we can invest in one stock? Like if you remember my previous episodes, I talk about stocks like CCK, and also I talk about stocks like there was this Pekat, right? This particular stock, you will notice that I bought it maybe for 40 cents and went up to 80 cents, right? And then if you were to look at my CCK, I think I bought it for 80 cents and then went up to 160, right? I mean, that is a success story. But having said that, for every investment, like I said, stocks can either go up and also can go down, right? And most times, right, as an equity analyst, out of maybe 8 or 9 of my stock calls, right, 1 or 2 will make losses. So that's one of the reasons why I am a strong believer in always diversifying. When you diversify, right, this will mitigate a lot of your risk. And if you notice, my portfolio will consist of a couple of small caps. And also you notice that I invested in Maybank and big cap companies, basically, right? So when you diversify, right, basically you are investing in multiple stocks. And when you invest in multiple stocks, right, if one stock were to go down in price, this is where you mitigate your risk, right? So I think One of the things which I want to add over here, right? Why, if we want to diversify our investments, why not we just invest in unit trust or mutual fund, right? Or and I get this question a lot, right? I says, what's my view about unit trust and mutual fund? And this is my view on it. Basically, unit trust and mutual fund, you have to remember, right, that they are ran by portfolio managers and also analysts. And when portfolio managers and also analysts actually help manage the fund, we have to remember, as investors, we have also have to pay them, right? So the cost of running a mutual fund or unit trust, right, is also there, is embedded in your returns. So if you were to buy a unit trust or mutual fund, right, number one, you have to pay your sales fee to the person that's selling you the unit trust. Number two, you also have to pay for the fund manager and also the analyst. And for me, I think unit trust and mutual funds are a little bit expensive, right? And another question is, right now, would I even look at, like I said, one stock lah, basically, right? I'm not comfortable even suggesting for someone to actually buy just one stock and hopefully it'll go up. If you notice my channel, right? If you notice my channel, I talk always about multiple stocks, right? And as I mentioned, if you buy multiple stocks, if one stock goes down, the rest is flat, right? Your portfolio will not drop so much, right? And if you are investing for your first time, yeah lah, I do not want anyone to lose their money lah. So basically, I'm always of the strongest opinion to diversify your investments or to buy a basket of stocks. So right now, that being said, right, what do I mean by basket of stocks, right? As I said, you want to buy a bit of stock A, a bit of stock B, a bit of stock C, a bit of stock D. Right now, with the fund management industry really evolving, they have came up with this innovative product called ETF, right? You guys can actually look it up on the internet. An ETF is basically a basket of stocks. So when you buy an ETF, right, you'll buy maybe 10% of stock A, 5% of stock B, 3% of stock C, and maybe 2% of stock E, So this will give you a good basket of stocks. And let me show you one particular index, right? So this is an ETF, right? Sorry, this is the NASDAQ, right? This is not an ETF. This is NASDAQ, right? If we were to look at NASDAQ, at one time it was trading at $5, right? And this was 22 years ago. And right now it's still trading at $60, right? You notice that in 22 years, it rose by 1,100%, which is basically, I did a math lah, it's about 50% per annum. Seems quite the appreciation seems quite substantial lah, basically, right? But we always have to remember this lah. NASDAQ actually came up with, so the whole thing of it all, what is NASDAQ, right? NASDAQ is a compilation of a lot of big stocks which are involved in the technology sector. So we have to remember during the early 2000s, that was the maybe the e-commerce boom, and this was where we could see companies like Amazon and also companies like Amazon actually did very well. On top of that, a couple of years later, we can actually see the boom of Apple, right? So when Apple actually managed to appreciate, or a lot of Apple products became so popular all around the world, you can actually see, and all of these stocks actually reside in NASDAQ, right? So basically, if we know that all of these stocks reside in NASDAQ, there's this ETF called QQQ. Guys, please remember this, QQQ, right? In fact, you can Google it right now, and you will see that QQQ would consist of NASDAQ stocks, right? And the top 10 holdings for QQQ would be Microsoft, right? This ETF holds 8% of Microsoft, 7% of Apple, 6% of Nvidia, 5% of Amazon, right? And you can see that's one of the reasons why there is always an upwards bias, right? In the past 20 or 30 years, we can see that these are the players which actually changed the shape of the economy, right? So Microsoft, this was back in the day, right, when they launched their Windows product. Apple, when they launch all their Apple products, we have to remember, right? We are investing in companies, right? And if these companies make amazing products, this is where the company or the stock will appreciate in price. Nvidia, this is the new, I guess, AI wave, right? Amazon, this was when they launched the e-commerce, right? Meta is Facebook, so on and so forth, right? Alphabet is the Google, right? They own YouTube, and also they own Google. So that's one of the things which I really like lah, right? And let me show you this one thing, right? Okay, over here we can see that in 1 month, right? QQQ, how much it appreciate by 5%, right? 5% in only 1 month. I don't think there's many investments that actually can appreciate by 5% in 1 month. And if we were to look at it on a 1 year basis, right? QQQ again, it appreciated by 31%. And as I mentioned to you, the good thing about an ETF, it's a basket of stocks. So therefore, there is risk of dropping, but the risk is mitigated by a diversified portfolio or diversified number of stocks in that particular ETF, right? And I think I just want to, I guess, conclude this particular episode by saying, if you are a Sharia compliant investor, and if you want to invest in only Sharia products, you may want to consider this thing called HLAL. This is a ticker symbol, right? And HLAL, what they do is basically they do a filter on Nasdaq companies which are Sharia compliant, right? In 1 year, it made about 19%. Okay, so basically what I'm trying to say is, for a Sharia product, right? If you want to buy Nasdaq, right? If you really want to actually ride the AI wave, and also we want to actually invest in all the champions which actually shape the economy for the past 20 or 30 years, Nasdaq is one of the places. And as I mentioned to you, one of the ETFs is QQQ. But that being said, if we want to be a Sharia investor, and we want to make sure that the money that we get is halal lah, basically, right? There's this particular ETF which is HLAL. And I'll tell you what the difference is, right? So a Sharia product, what they normally do is they will get people which have knowledge on what's Sharia and what's non-Sharia. And I have seen these analysts, right? Or I've spoken to these analysts, and what they tend to do is they just look at the company, they look at how the company makes their profits, so on and so forth, and then they'll give a rating, right? And as I mentioned in previous episodes, what makes a halal company is that when they earn their income secara halal lah, basically, right? Secara halal lah, basically, right? So things like maybe riba, things like maybe like what else? Riba, and also things like doing business which actually sells like maybe pork products, or maybe things that which is not non-halal, right? Those will not be part of the Sharia filter, right? So as I mentioned to you, right now, I know that, if you are looking towards your ASB, right? And if you notice your ASB and you're wondering to yourself, 5% for my ASB, is that enough? I get that question a lot, right? And let me answer this particular question. By the way, if you have any questions, please do write it down in the comment section and I can answer it, right? Petro trading, you included. So as I mentioned, I have this question, right? That a lot of them ask me, is ASB enough, right? Returns. I think ASB, this is my opinion lah. ASB is an amazing asset, right? What they do is they give you amazing returns. You get your 5% dividends, right? And in a market which swings so wildly, sometimes it go up and then sometimes it goes down. And right now, inflation is actually a lot of inflation is actually priced into our stock markets, right? It's very difficult for people to invest right now, right? And if ASB can give you not only capital guaranteed and give you 5%, I feel is amazing. That being said, as I mentioned to you, we always have to remember that we live in an environment where inflation, I think, is relatively high, right? If you ask me, I mean, over in Malaysia, if I want to find things like beras tempatan, I find it very difficult to find, lah, basically. On top of that, if we were to look at our electricity, our water bills, so on and so forth, right, we can see that it's getting more and more expensive, right? And honestly, if we continue to get returns lower than inflation, what's going to happen is that we are tricking ourselves, lah, basically, right? Even though we get 5% of income per year, right? Say assuming, I'm just say assuming this example, our inflation numbers are maybe 8 to 9%, right? What's going to basically happen is that even though we are still making profits from our investments, but the inflation is slowly eating into our wealth. And I know that you know, right? If we were to look at our returns versus our current lifestyle, I think you can kind of tell that, maybe it's not enough, right? So the big question is, where should you put your money? Where should you put your money? Which is also halal compliant, which will also give you good, which is also halal, lah, basically, right? And as I mentioned to you, right, a lot of this, these products, right, they have a fund manager, they have an analyst. All of this stock can buy daily. A beginner question. Hey, thanks for the question. Thank you so very much. Yes, ETF you can actually buy daily, right? You can buy it any time of the day. In fact, I'll show you my portfolio one of these days, lah. Right? I'm starting to build an ETF portfolio, and my returns from my ETF portfolio is about 40%. Not bad lah, 40%, right? And the risk I'm taking is actually not so high, right? So you can actually buy your ETFs, right? If it's an American listed ETF, you have to make sure that you buy it during the American trading times now. And for the American markets, they tend to open, I think, at 9 p.m. Malaysian time till maybe 4 or 5 a.m. Malaysian time. So they open at 9 p.m. to 5 a.m. right? So I'm gonna talk a little bit about why I'm choosing American ETFs and why not Malaysian ETFs in future episodes, right? But thank you so very much for the question. So yes, you can actually buy these ETFs from Mondays to Friday, right? Between 9 p.m. till 5 a.m. right? And I think in future episodes I'll show you a little bit about my ETF investment. Another thing, right? I'm gonna just tell you, we decided to actually invest ETFs in the US markets. So honestly, you have seen my returns for my Malaysian stocks. You'll notice that, yeah, I mean, some of my stocks I make about 80%. Some of them 100%, right? I'm sure you've seen that before, right? And I'm sure you're also wondering, like, hey, why is Anand, why don't he just invest in a single stock in the US, right? The whole thing of it all is that I have to admit, I'm very new to the US market. So when I'm very new to the US market, of course, I want to minimize my risk. So if I want to minimize my risk, as I mentioned, the best way for a beginner to minimize their risk is to diversify. And the best way to diversify is buying an ETF. So I hope that you guys learned something this evening, right? Petro trading, thank you so much for asking that question. I'm going to start trying to do live. Oh, how about cut or text? Talk to you about Malaysian markets, right? I'm well versed in the Malaysian markets. For the Malaysian markets, we do not charge any tax for any gains from our profits, right? So if we bought a stock for maybe 1 ringgit, we sell it for 3 ringgit, we make 2 ringgit in terms of profit, right? They do not have this thing called capital gains tax in Malaysia. So whatever you invest in, you get back lah. You won't get taxed lah. That's one thing good about Malaysia. The US, I think you have something called the withholding tax. I think it's 30%. for withholding tax, right? Again, US stock market. Oh no, the caveat over here is I'm very new in the US stock market. So I have not. Yeah lah, I'm very new lah. So I'm just accumulating stocks at this point in time. I am not trading very heavily. I'm not selling or whatever. So I'm just buying lah. I think I'll show you in future episodes what I'm actually buying. In fact, you know what? Since you're here, I'll just show you what I'm currently looking at, right? And this is one of the ETFs for your benefit, lah, right? Let me just type this this ETF. Just give me a second. I'm actually holding the phone. I didn't bring my stand, so but I promised lah I'm gonna do a live today. So I was like, okay, let me show you this particular ETF. So I bought this particular ETF, right? This is called TQQQ, right? You can see, right? TQQQ. You see that Nasdaq, and then you see titik, and then you see TQQQ, right? In 1 year, right, it made 80%. So I actually bought this ETF, I think 1 month ago. I mean, in all honesty, lah, 18%, 30 days, right? I feel like it's a good return, lah. You see, this is TQQQ. This is one of my big wins, lah, especially in my my ETF portfolio, right? So yeah, I mean, I'm going to talk a little bit about also how to pick ETFs, right? I'm going to give you a big disclaimer over here. Not all ETFs gives you good returns. Some ETFs, they don't give good returns. Some ETF gives really good returns. I'm going to show you how I pick. You know what? I'll just tell you how I pick my ETFs. One of the ways to actually find ETFs, right, really good ones, right, is you need to know what sector is growing. If I ask you right now, what sectors do you guys think is growing? Right? I'll give you a couple of seconds so you guys think about it. One of them is the AI industry, right? And and also another one is also the technology industry. So that's one of the reasons why I invested in QQQ as an ETF, right? So if I want to actually invest in the technology sector, right, this particular ETF would give you the exposure in the technology sector. And TQQQ is another ETF which gives you exposure within the tech sector. That said, if you invest in an ETF, right, some okay, say, let me ask you, if there's an ETF that invests in maybe something which is not in fashion. Let me think of an example. Maybe the travel agents, right? Maybe there's an ETF which invests in companies which are involved in those travel agents, where the old school where you call a person and say, hey, can I buy a ticket to this place, to that place, right? A lot of these travel agents, their businesses is already being closing down, right? And right now, more and more people are actually buying their tickets via online. They do not go through an intermediary, or they don't go through a person which will buy and sell tickets for us. Right now, what we can do is we can actually go to a website and we can just do it on our own, right? So maybe certain industries, right? If we invest in an industry which is declining, most likely those ETF will not do right. Will not be doing okay lah. Probably also declining in price, right? So overall, my tip over here lah, right, is number one, if you want to minimize your risk, you want to diversify, right? And like I said lah, as a beginner, as a pure beginner, even myself, right, I consider myself as a beginner, especially in the US markets. I do not want to take big risk, so I'm actually going into ETFs until I start getting a hang of the US markets. Then I'll start buying single stocks, and then we will maybe make the 20 or 30% returns, right? That's the first thing, right? Second key takeaway is when you buy an ETF, always know what these ETFs, these ETFs will consist of a couple of stocks, right? You want to buy these stocks, or you want to buy companies which are growing companies, right? You don't want to buy companies which are, their business is declining, or their business or their revenues are declining, basically, right? And I gave you an example. Assuming if we invest in an ETF or in a company which actually sell postcards, for instance. And as we know, postcards, no one sends postcards, right? Very seldom. Right now, people probably send WhatsApp, and they also will send things like, they normally send WhatsApp, or they send things like email, right? And postcards, not many people send it, right? So if you buy companies which are involved in maybe printing of postcards, maybe those, again, this is an assumption, this is an example, right? If you were to buy those companies, if the demand is not there, what's going to happen is these companies will not do well. And if these companies not do well, then the stock price will also go down. So if you buy ETFs which have all of these companies, most likely we may lose money as investors, right? So that's key point number 2. Key point number 3, I think, is this. If you notice the prices of ETF, hey, thank you so much, sir. If you notice one thing, right? Just now I showed you the prices of ETFs. Let me give you this example, right? Why I like ETFs, right? Let me just show you this particular thing, right? You look at this QQQ, right? You'll notice that they consist of Microsoft, Apple, Nvidia. If we were to buy one Microsoft stock, right, I think it's about $100 over or $200, right? Even Apple is $100 over $200, and Nvidia is $100 or $200. So let's say, assuming if all of this is $200, right, and it consists of 10 stocks, right? And again, this is an example, right? So 10 times 200 is maybe $2,000, right? You look at this, the ETF, right? Is 480, right? And you're wondering yourself, whoa, this is too expensive. I cannot afford this, right? So maybe consider this halal ETF, which will give you the stocks in the NASDAQ market, but it only costs $50 to get an exposure for the growth stocks. And if you're thinking, wow, can make money or not? Look at that. 1 year, 19%. I still think it outperforms a lot of our local assets, right? And like I said, right, ROIs, or your return on investments, right? You want to pick asset classes which gives you better ROIs. The higher the ROIs, the other word for this is that the assets are working harder for you. And if your money works hard for you, this is where you can actually build your wealth faster. So always remember these insights, right? So yeah, with that, I'd like to thank everyone for this evening. I am probably going to wind down, probably, and maybe it's already 11 o'clock. So with that, take care and good evening, guys. Thank you, Petrol Trading, for coming in, and I hope to see you guys in the next live session. Take care. Bye.